a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
Do Treasury bond ETFs have a place in your portfolio? We're going to see if we can find out now with our ETF Research Director, Nina Mishra, who joins me. So first, let's talk about Treasuries overall. They've really been popular lately.
Yes.
Seem to be gaining in popularity also.
Yes. And, you know, stocks had an ugly quarter.
Yeah.
The third quarter. It was the worst quarterly performance for global stocks in 4 years. And that was thanks mainly to fears about this China slowdown and ramifications for the global economy. And as stocks fell, many nervous investors, they scooped up Treasury bonds because of their safe haven status. In fact, looking at the latest ETF fund flows for the month of September, 5 out of top 10 asset gainers were Treasury bond ETFs.
Wow.
And this is mainly because of, you know, weak global growth and low inflationary outlook in the US, which continues to support the outlook for Treasury bonds.
Sure.
And investors should also remember that bonds provide diversification, income, and stability. So that deserves some place in your portfolio.
Are there any negative headwinds out there for bonds right now?
Well, many investors fear that bonds will sell off once the Fed starts raising rates.
Right.
So they should remember, first of all, the weak jobs report here has, now it's leading many investors to believe that the Fed may not raise rates this year at all. It may be sometime in 2016. And then the Fed has also made it very clear that once they start hiking, once they start raising rates, even then the monetary policy is going to stay accommodative for a long time. So the hikes are going to be very gradual. And also investors should remember that longer term Treasury bonds, their yields are more determined by the inflationary outlook than by short-term Fed fund rates. So as long as inflationary expectations remain muted, then that is good for longer-term bonds. And once the Fed hikes rates, it will affect the shorter end of the yield curve more. Now, investors should have also read would have read some reports regarding China selling Treasury bonds.
Yeah.
There was a report in the Wall Street Journal recently that central banks in China, Brazil, Russia, and Taiwan, they sold their holdings of Treasury securities. That was basically because of private capital coming out of those countries. So central banks had to intervene in the markets to prevent the decline of their currencies. So they sold some Treasury securities, raised cash, raised dollars, and intervened in the foreign exchange markets. At the same time, private buyers in many of those countries were buying US assets, mainly Treasury securities, because of weaker outlook for assets in their countries, a stronger US dollars, and better outlook for US assets. And many central banks also, including the central bank in India, they purchase Treasury securities during this period. So if China sells Treasury bonds, it may put some pressure on the Treasury bond market. But at the same time, we should remember that China is the biggest foreign owner of Treasury securities.
Right.
They hold almost 1.25 trillion of Treasury bonds. So they themselves would not like to cause any major disruption in the Treasury bond market.
It's interesting. It seems to be a multifaceted story here. It's not very straightforward. So you have to really look at a lot of different dynamics that might be in play.
Yes, yes. So as I mentioned earlier, that weak global outlook and low inflationary expectations, they are good for longer term Treasury bonds. So I think investors should hold some longer term Treasury bonds in their portfolio, mainly for diversification, income, and some stability.
All right, so the two examples that you brought with you, one iShares 20-plus year Treasury bond ETF, TLT the ticker.
Yes, it's a very popular ETF in the space. It holds Treasury bonds with remaining maturities greater than 20 years, cheap, with an expense ratio of just 15 basis points. It yields about 2.6% currently, and it's a Zacks Rank 2 buy ranked ETF.
All right, and then there's the Vanguard Long-Term Government Bond ETF.
And this is, the ticker is VGLT. This is also a longer, this also holds longer term treasury bonds with average effective maturity of about 25 years. This is ultra cheap with an expense ratio of just 12 basis points. Yield is around 2.7% currently, and this is also a Zacks Rank 2 buy ranked ETF.
All right, do you own either one?
I don't.
All right, check out more ETF information on our website, Zacks.com. All you need to do to get to it is go to the home page and then use the top toolbar, the Funds tab in the top toolbar. That will cause another drop-down window, and then you just hit ETFs and it'll take you right to it. And if you're watching our videos on YouTube's platform, don't forget there is where you can subscribe to them and also comment on them. With Nina, I'm Terry Ruffalo.